This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. This directly due to news that the European Central Bank lowered all three of their main interest rates, including their benchmark interest rate, from 15 basis points down to 5 basis points. So lower interest rates in the Eurozone, very supportive to stock indices. This came as a very big surprise since the majority of analysts were anticipating no change in policy at the ECB meeting. So nothing really changing as far as our long-term view in stock index futures. Now with the ECB cutting rates, it is likely that other central banks will be accommodative as well, or even more accommodative. Still looking for the Bank of Japan to add to their QE sometime within the next year or so. So look for more of the same. Higher prices are likely for stock index futures. And I think this is a trend that will last through this year at least. In the foreign currencies, seeing the euro currency lower as a direct result of these lower rates from the European Central Bank. In fact, the euro now at its lowest level against the US dollar since July of 2013. Also, it does appear that there is a good chance that there will be more accommodation coming from the European Central Bank down the road. It's a very strong possibility that they will come in with some quantitative easing program. So the trend, I think, is still intact. Look for lower prices in the euro currency. We had the Bank of England leaving credit policies unchanged as expected there. However, the pound lower in a sympathy move with the weakness in the euro currency. And the yen under some pressure, even though the Bank of Japan concluded their two-day meeting today, leaving credit policies unchanged. However, prospects of more economic stimulus from the Bank of Japan down the road continues to undermine the yen. This is a trend that will probably last for quite some time. So we are anticipating lower prices for the Japanese yen. And interest rate markets seeing pressure today. Looks like no new tensions or heightened tensions in Ukraine. That seems to be causing some type of flight to quality long liquidation. However, the 30-year bond now falling into an area of major support, and I would view this as a buy area for the 30-year bonds. Still feel that the main trend is higher, still feeling that this is a trend that will last at least through the end of this year. So look for higher prices from here in the 30-year bonds. It also does appear that, according to the consensus view, the Fed will raise interest rates in the middle of next year. Our feeling remains that it'll probably be much later, possibly into 2016, before the Fed can raise rates. So in any event, look for higher in the 30-year bonds. This is a major support area. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.